Hello everyone. Saturday morning, and I don't know about you guys, but when I wake up I just feel a lot of energy, like I need to do something or accomplish something. So early in the morning for me, but I thought I'd just put this video together and do a kind of a weekend review. I want to cover a couple things that I'm seeing in the markets, and also at the end of this video I'm going to put a link in the video for a video that I put out back a couple months ago. Basically, it's the one video that I really put together where I really was trying to just call the top of the market. And I basically was saying, I think this is the absolute top of the market. I'm saying it's the top of the market. And I never really put out videos like that where I would call the top. I mean, I would put out videos where I would think that there's a short trade opportunity, and then I would be wrong. And that happens a lot, especially when you're shorting. You think you're in a good short trade, and then you end up being wrong, and you have to lick your wounds. But this video is the video that I put out where I said, look, this is the top of the bull market. Hold me to it. If I'm wrong, I'm wrong. But this was my one call where I was saying it's the top of the market. And I had a lot of things that I was reading that told me that at the time. So I think it's interesting. Go back and watch that video. I'll put a link after when this video ends, the link will be there. And all right, so getting into these charts for the weekend review. And I'm going to try to make this relatively quick. All right, here's your Nasdaq futures. Look, we broke trend right there in the Nasdaq futures, closed on a very weak note. If I go to the hourly chart here for the Nasdaq futures, we pretty much closed at the lows of the day. We were just kind of consolidating a little bit and rejected at resistance right here. So what's going to happen on Monday? Well, we could bounce back up to resistance. We could easily do that. Resistance sitting there at 88.28. You can see it there on my chart. But I think we work our way lower down to the next support. I see this major support right. We do have support right here. It's right around there at 8508, and then we got another one down here at 8382. So I think we work our way down, but we could bounce around within this range for a little while. But over the, it's not going to take too long. I think we work our way down, and that's just because we broke this bearish pattern. To the Qs, I see this looks more bearish to me. Here's what happened on the hourly chart on this week. This move right here, this is your false breakdown. This is what happened, I believe, on Tuesday, April 28th. And so this is when we started to see this, I was like, okay, we're breaking down, but it's not impulsive. It's just kind of a weak breakdown. So we could do kickback rallies. Usually when it's not that impulsive, you're expecting kickback rallies where it's going to start kicking back to the trend line that it just broke down from. And what happened on Thursday, I believe, is we gapped up and instantly recovered the trend line. And then it was just, a bull party right here. It was just gap up and just rip it higher. And all the shorts were getting squeezed out. I know because I saw comments and I saw people basically saying all over the internet saying they were capitulating and throwing in the towel. They're wrong on the short trade. And I saw it all over the place. So a lot of people were saying, you're wrong, for shorting. And, when I see that, I think to myself, okay, this feels like the ending move. This is the squeeze, the short squeeze, basically. And that's what that kind of was. And it squeezed because you had the breakdown. So shorts piled in. They were like, okay, we're good, ready to short. Boom, squeeze them out right there. And then that move was followed by an actual breakdown here where it broke down. Again, not that impulsive. And we started to kick back right here. And then there's your impulsive breakdown with the gap down. We gapped down and then sold off and closed pretty much near the lows. So that's what you want to see, for a confirming breakdown is a nice impulsive breakdown where it gaps and then sells off. So the sell signal is completely intact right now. It is on a sell signal. Markets are heading lower, or at least they should. I think we go, we've got this level right here to break, 211.50, 211.64, whatever. It's a range. It's not to the penny. So if it undercuts it a little bit and then recovers, we're just in that range. What you want to see is maybe an undercut, come back, back test, fail, and then start to roll over. But that's your range. And I think if we break that, we're heading all the way down to this 203. That's a major support right there, 203.50, 204 range. I think we're going to head down there. And down there is going to be a battle. So I'll probably be taking some profit on my short trade around there temporarily. So we're going to watch that. But I'm not going to take it all because I think there's probably a bigger move. I think we're in a bear market rally, but I am seeing some things that could change my opinion there. All right, so look, here's the SPY. Bearish rising wedge. We broke this one a while ago. This one broke before the Qs. There's your bearish rising wedge. Broke sideways, ramped up, false breakout right here. See the range that I have? This is your sideways range. This was, your spring coiling, broke to the upside, so that's bullish at that moment in time, but it was a false breakout and we gapped lower and then sold off. So this is a bull trap, false breakout, and I think now we head to the bottom of the range down here at 272. I think we go down there, maybe chop around a little bit, and then probably break to the downside. XLV, nice clean bearish rising wedge on XLV. I really do like this one. I am short this, and I'm short triple Qs. I'm short this one. I'll kind of try to call that out. Bearish rising wedge, broke to the downside right here. So you can mark these out. Here's an hourly chart. I use tradingview.com and I use logarithmic scaling. So if you want to mirror this, feel free to. I wouldn't mirror my trades because I've got thousands of people or 1,000 people looking at the same thing. But we're trading large caps for the most part, so we're not going to move the market. Bearish rising wedge. Now this one was impulsive. This breakdown, sold off, held right here, and then gapped down. So nice impulsive sell signal. That was a clean sell signal. Here's a back test, and now we're actually breaking down and getting kind of the real move. Another gap down right there. So that's another impulsive breakdown. They started to buy it up towards the end of the day. Maybe they buy it back up to resistance 98.67, and then it fails. But yeah. I think what they'll probably do is probably start to buy it up just a little bit on Monday, and then it starts to roll over again, and we roll down to 95.60. That's your next level. And below that, I've got 93.75, 90.42. That's all we'll cover for now on that one. Microsoft, I just keep an eye on this one. It's such a major player in the market. It has the potential to move markets, so it's a good idea to keep an eye on it. Bearish rising wedge. Broke down. It was an impulsive breakdown, We had a gap down and a sell-off. So that was a sell signal right there. We've been flagging the entire time. So what you want to do on this one is a break to the bottom of the flag, or I think we're heading to the bottom of the flag here. And then when you break down, you break this flag, probably going to come in the form of a gap, but you break this flag, and that's kind of your next sell signal, basically. And then we head lower. You've got a level right there, so I think that's probably the near-term target right there. We could extend that out. That's pretty clean. There's a nice clean level of support, 162.55. Moving on to Apple. Now Apple was interesting on Friday. They were really fighting to keep this thing bullish, basically. If I go to the 1 hour shows up, but look, here's my uptrend line in Apple hourly chart. So this is the rally that we've seen in 2020, and look what they did. So it gapped down on Friday, and they just bought it right up, just massively. Just dip buyers stepped in and just bought this thing aggressively. And so after that first candle, though, that first hourly candle, the rest of the day it just sold off pretty aggressively. And look what they were trying to do. If I go to the 1 minute, you can see my trend line. Look, we broke down and they were just battling to keep it within that trend. They just could, they just were really trying to recover. They recovered it a couple times, kind of fake out moves, basically like that. Oh, we recovered support. We're still going to hold this trend. And then at the end of the day, you can see that it failed and sold off. So we'll see. This one's still a little too close to call. They could easily gap it up back into support on Monday. I think it heads lower, but could easily hold support. If we break to the downside, I've got this level of support right here, 272.62. So I think we head down there. And that's where I'd put the highest probability, given the rest of the market's stance. Google still within trend, really nothing. I think we'll just head down to the bottom of this channel, and then a bear break right here would be bearish and sell off. That one's not too great. Nothing really on Costco. Walmart looks good. We had this was a false breakout right here. If I go to the daily chart, you can see big bearish rising wedge on the daily chart going all the way back to 2015. So big bearish rising wedge. It's been coiling the entire time, and just recently we broke to the upside. But look, we got a gap right here and a gap right here. This is what you call an island cluster top. It's a reversal pattern, and so the way that you can play these things. Oh, I don't want to move my trend line. The way you can play these things is, you basically get short right here on the breakdown, which would be right here at 125.50, and then you would cover if you broke back above, probably about the halfway range. You could even put it to the top of the island top. That would be, there would be, that would be a what is it, 5%, a 5% stop loss. And then the target would be all the way down here at the bottom of the bearish rising wedge. And from where we're at, that would be a 15% gain. So a 3-to-1 risk reward ratio. That's favorable. That's good. So that could be a trade idea right there. I'm short this as well, but I'm short from right up here. I got short going to the hourly. I saw the pattern, this triangle pattern, and these typically resolve to the downside. So when we started to break, I got short, and I've caught this entire breakdown. So what could happen? Well, could back test up to 124.50 and then start to roll over. But I think ultimately, given that it had a false breakout, that sets us up for momentum to the downside. So I think we head down to the bottom of the bearish rising wedge, 104, 15% or so from here. And then I'll most likely cover my trade there. And I'm going to cover a little bit along the way as well. I got this 117.82. I'm looking to cover probably a little bit there too, lock in the profit. I like to do that. When I go into a trade, I have my largest position at entry, and as it starts to work, I start covering that, locking in profit, so that towards the end of the trade, I don't, it's virtually impossible for me to lose money. So, and it's virtually impossible for me to give up profit as well. All right, moving on. SOXX, I am short this one. Nice clean bearish rising wedge, nice breakdown. Impulsive breakdown. Just started to break here. Oh, and look at that false breakdown right there. So that's nice. When you see a false breakdown, that means it trapped or shook out shorts. When you're short, you don't want to have a crowd with you. You want to be alone. The less shorts in your trade when it works out, the better, because you don't have shorts there to cover. Covering shorts are buyers. They buy to cover. So as a trade starts to sell off, to take profit, you buy the stock. Basically, you buy it, and that's how you close out a short position. Think of it the opposite of going long. If you are buying low and selling high to cover your trade or close your trade out, you sell your position. Well, when you're going short, you're selling high and buying low. So when it goes down, you're buying the stock to close out your position. It's the exact opposite of making money when a stock goes up. And no, I don't trade options. I don't use puts and calls. I just I go long equity or I short equity. And for the most part, I prefer to short equity, especially in this market. I believe we're in a bear market, so I'm looking more for short trades. And when that bear market starts to play out, then I'll most likely this channel will start flipping over into more of a bullish trade channel where I'm looking for a lot more bullish trades. And that at that point in time, most people, the majority, will be bearish, I would think. And everybody will think that the stock market's going to crash forever. Anyways, look, false breakdown right here. So that created the short squeeze or bull trap, and then we broke. And this is a lot more impulsive because see, you started to break down just barely and then gap down and sell off. So there's an impulsive sell off. This you just barely broke, back test, chopped around. You were right there. There was nothing impulsive. And this could have been the same thing right here. That's what they made it look like, that it could be a false breakdown, but then it turned out to be the real deal. So looks good. I think we had lower 214.90, 215 basically is the first stop. And then I've got 201, 201.80, 202. Again, these are ranges. Their levels are never exact. They can be, but for the most part, I treat them as ranges. 193.27, next level down. Moving on. Tesla is a rock star right now for the short sellers. It's doing well. So basically this one, how did this close? Closed extremely, well, it closed at support, basically. I mean, here's support, 687. And we had the earnings report where it gapped up 10%. That created your objective short entry because here's your resistance, 859, 860. I added to my short position right there. And since then, I mean, this thing's just collapsed straight down. And then to pile it on, you had the CEO tweeting. I mean, it's down almost 20% from that high in 2 days. Pretty good move. But Tesla is a mover, so I know that. And when I took the short position, I didn't take, my position isn't huge. I don't take the more wild the stock trades, the more volatile, the smaller the position. I can take a large position in something like triple Qs because you're trading, a whole sector, and it's not as volatile. But if something's really volatile, my opinion is you take a smaller position, and you'll make your money in the volatility, not necessarily, in the sizing. So anyways, here's support, 687. I think we're going to break that, and we're going to gap fill. Gap fills at 650, and that's what I think's happening. So I think we'll probably gap fill next week. However, we could bounce up before we gap fill. You'll see that sometimes. Everybody's eyeballing this gap, so everybody sees this nice clean gap. And so you remember, when everybody's looking at something, you're either going to undercut it and fall through it, or you won't get there. So we might not completely gap fill, or we'll undercut it. Those are the two things that typically happen. So one thing that could happen before you gap fill, though, is you could bounce back up to resistance, 780. So if we did bounce up to 780, that's an objective area to be short right in there. If we don't and we just run down and gap fill, then I'm looking to cover my short trade around 650, and that would be from the very high, that would be a very nice trade at 25%. However, I covered that position that I added on this crash. I already covered that, so I have my original short position. And it's profitable. It's up about 15%, I believe. All right, moving on. All right, let's go into some gold trades, and then I want to kind of point out what I'm seeing. Let's look at the dollar. This is interesting. Look at the dollar on the daily, just all selling, for the last few days. It's interesting, because the thing is the dollar's been relatively strong. And holding up, but now it's starting to get weaker, and that could be a signal that the economy is actually going to start getting weaker. I mean, the economy is weak, clearly. GDP is weak. Go to New York Fed GDP Now website and look at the Nowcast. You'll see that GDP has just collapsed. But we're starting to sell off. And here's the thing. When I go to the SPY chart, let me roll that back over here real quick. When I go to the SPY chart and I look at a longer term SPY chart, look, in 2018, this crash right here, the Fed was raising interest rates. They reversed course, started cutting interest rates, and they weren't doing QE necessarily, but they were cutting interest rates. And they started, and that was a 180-degree flip from raising. So they were tightening. Oh yeah, they were doing QT, reducing their balance sheet and raising interest rates. We crashed. Then they completely stopped reducing their balance sheet and started cutting interest rates. I think they cut them 3 times. Then we got the rally in all of 2019, which ended up being the backtest. And then here we got the collapse. So then the Fed had not completely gone to zero. And what they did here on this crash was they went to zero for interest rates, and then they just did massive quantitative easing program. It's just, they've gone completely nuclear trying to stop what they're, I guess, what's potentially going to unfold. And so now they have no interest rates to play with, unless they go negative, of course, and they've spent a ton of money. So now what happens next? If this is a bear market rally here, and we just failed, and we are going to roll over and have another crash down, or maybe even undercut these lows and head lower, then what's the Fed going to do? Well, they have no interest rates, and going back to the dollar, that's how this plays in. They don't have interest rates anymore. All they have is massive money printing. So the dollar might be sniffing this out, and it might be happening now. It's going to happen before it actually happens, but the dollar might be saying, okay, the next crash we get, the Fed's going to have to just go absolutely crazy with money printing, and they don't have interest rates, so it's all their stimulus and all their everything that they can do to stop the market from crashing is going to be done with money printing, and that's going to really weaken the dollar, and that might be what the dollar's seeing here. So that plays into gold. That's why I've been, if you go back and look at old videos for the last year and a half, I've been interested in buying gold mining stocks. I pointed those out, said, look, these are good. These are a good buy. And that Barrett Gold trade was up, 160% or more from when I started really pointing it out in the market. So I made a lot of money on that, and anybody else who's been following me for a while probably made a lot as well. So anyways, here's gold. It's been, it's been strong, and this gold futures, let's look at bullion. Look, we had this trend here in gold. It broke. Maybe it plays out to the downside and we get a push down to like 1570. I think any kind of move to the downside in gold, to me, feels like a buying opportunity. And that's because if I go to the longer term chart, here's the daily chart, you've got an uptrend. Higher low, higher low, higher low, higher low. This was an equal low. Moving up. So now what? If we get a pullback to 1570, that's just a higher low. Still keeping the bull market intact, and higher highs along the way. So looks good to me longer term. And in the shorter term, I'm just looking for some sort of a pullback. Barrett Gold's my proxy, my stock of choice. I'm seeing some divergences in the PPO and the RSI. So it set us up for a move to the downside. That's why I sold my position right here at 28, right at the pop, right there at 28.20. And, if you go to a daily chart, if my chart works, seems to have paused. Sorry guys, I can't seem to get my gold chart to work, so I'll just have to move on, and I'll put out a separate video on gold. Going back to the SPY, the one thing I want to point out that could be playing out, I don't know, but look, maybe we have this megaphone pattern, and this is a weekly chart, so going back to the bigger picture stuff, we have these bottoms right here. This is the most recent crash, kind of plunged right down to there. So we have 3 data points now. That makes a trend, and maybe we are making this megaphone pattern, and that could mean that the near-term bottom is possibly in. However, megaphone patterns, and here's the top of the megaphone, which goes back to the decade-long bull market trend line. If you go back and watch my older videos, I pointed this trend line out. This is the trend line that proved to be the correct, accurate predictor of the market crash. And here's 2009, and we ran up. Look, support, had a reaction, held support, held support, held support, held support. We broke down, back test, full back test, absolute crash failure. So maybe this is the megaphone that we're going to work our way through over the next, several years, decade, who knows. But that would mean we could possibly have a shoot all the way up to the all-time highs, and just make marginal new all-time highs before another move down. I don't think that's going to happen. I think what's going to happen is this is a bear market rally. We're going to start to crash down more, and we're going to head down to this 186 to 211 range. This goes back to the 2015, 2016 trading range right here, where we had that deer market is what they called it, which is a sideways market. And I think we head back down to that range, and possibly down to this 153 level. That's not out of the picture. That could easily happen, and that would give us a top of this trend line here back to the .com bubble high and the 2008 bubble high. We could back test that trend line. Again, this is logarithmic scaling, so that's why the chart looks like this. And so anyways, that's where I see the market going. That's it, guys, for the video. If you're interested in seeing the video where I called the top, click this link right here. I'll put the video up. You can look at that, and that will give you an idea of how I was able to anticipate and use technical analysis to call the market top. Thanks, guys. Give me a thumbs up. Catch you guys on the next one.